Today's currency report, the group of 8 leading nations will meet this week in Italy, but there is a growing sense they're losing their influence as the United States and Western Europe try to recover from the recession. Let's head back to our markets desk. Courtney Donahoe joins us. Courtney, good morning.
Well, hey, Mark, all the talk about the U.S. dollar being replaced as the world's reserve currency illustrates this shift in power. Now, since early March, we've seen the major currencies rally against the dollar as risk appetite picked up. And this was led by commodity currencies like the South African rand. But in the past few weeks, there's been a reassessment of the global recovery, especially as industrialized nations like the U.S. and the U.K. take on more debt. Now, analysts say that a less optimistic view will likely prevail at the G8 summit and will set the long-term tone for the foreign exchange market.
We will have a much more muted economic recovery, which looks to us like being more like a square root and not like a V-shaped. And that is, I guess, what the market still has to price in, namely a period of prolonged growth weakness over the next 4 to 5 years.
So where are investors putting their money? The yen has become the favored safe haven currency on the diversification talk, Mark.
Courtney Donahoe, thanks. Many expect the dollar reserve debate to take center stage at this week's G8 meeting, but not Dan Katzive. He's a currency strategist at Credit Suisse. He joins me now from his office in Manhattan. Dan, good of you to join us. And you say the dollar will be a non-issue at the G8 meeting. Why?
Well, this is the meeting of the leaders and not the finance ministers, and typically they don't dwell on exchange rate issues too much. There has been some talk about the dollar's long-term reserve status from some of the emerging nations which are going to be attending, but we think anything that is said on that front will be behind closed doors, and it's not going to be part of the formal communication that comes out of the meetings.
So there could have been a likelihood that the dollar, the reserve currency, might have been discussed, and that, of course, could have moved markets. Could the fact that it's not going to be discussed move markets as well?
You might see some relief. I think most market participants realize that this talk about replacing the dollar or finding an alternative to the dollar is very theoretical and long-term in nature and not something that's going to happen anytime quickly. We do think that there is perhaps underway a small shift in the allocation of newly accumulated reserves by some of the major reserve managers, which is important, but we're talking about something that's in the nature of small percentages, not massive changes.
You know, Dan, I understand your point. I mean, if there is some kind of change in terms of the dollar, the dollar reserve status, it may not happen for years. But what's interesting, what went from, kind of like, that could never happen, that there seems to be more credibility in the conversations that we're kind of hearing when it comes to the dollar status. Is this something that we kind of all have to kind of sit up and take notice of, though?
Well, I think that what's happened over the past 5 years or so is that you've seen a massive increase in foreign exchange reserves, and the dollar has absorbed a disproportionate share of that increase. So it's natural for there to be some discussion about changing this overweight dollar position that effectively the emerging world has accumulated. The problem is that there's really not a lot of realistic alternatives. There's the euro, which probably will get a larger share over time, but that's already getting to exchange rate levels which might not be attractive for right now for doing that kind of a shift. The yen is underrepresented in reserves. We think that the yen could get a larger share than it has now, but it's never going to be on par with the euro or much less the dollar.
What about a basket of Asian currencies, as some have suggested to us?
I mean, there may be some of that, but at the end of the day, you don't have the liquidity or the size of the domestic asset markets really to absorb the kind of flows that we would be talking about if there was a significant allocation shift. And at the end of the day, reserves, what's important for reserve managers, I think long-term geopolitical, military, and long-term sustainability, transparency of the legal framework, all these things, the dollar comes out on top. So, it's hard to see the dollar dropping to second place among reserve managers. But even a small 1 or 2 or 3 or 4% shift in allocation would have significant consequences in the market.
And Dan, for the 4th day, we now see that the dollar is gaining some strength against the pound. There's been some speculation the Bank of England is going to be just expanding, maybe just slightly, its asset repurchase program in an attempt to revive the economy. How is that factoring into your position on the pound?
Well, we've been bullish on the pound, and we're still constructive. We think it makes sense to be neutral going into the meeting. I agree that there is some risk that they use more of the authority they've already been granted or ask for more authority even. Certainly the comments from the policymakers in the UK don't seem to suggest that they're looking to exit anytime soon. We think over time, even if they do increase QE this month, we think over time that the data is going to overtake the QE process and mean that the Bank of England will be one of the first to exit QE among the central banks that are doing it. But that's something that you may have to wait a month or two before the market begins to price. So we think the pound is a buy on dips. We'd be neutral going into the meeting.
Right. Dan, we have about a minute left. What's the next driver for the currency market?
I'm sorry, I couldn't quite
What's the next driver for the currency market?
Well,
What's going to move it?
I think the next drivers are going to be somewhat somewhat related to the production environment over the summer, which our global economists, our U.S. economists think could be quite strong. I think markets may be surprised at the resilience of the risk trade and the growth trade as we move through the summer. And
Dan, just quickly, you think Canada is a good way to play as well?
That's right. And we think the currencies that are well geared to the production cycle and particularly auto production and which are not yet at overvalued levels are interesting. And Canada fits that category. Mexican peso does as well, as does Sweden, although Sweden, after last week's rate cut, less attractive.
Dan Katzive, currency strategist at Credit Suisse, joining us from here in Manhattan. Dan, thanks. Carol?
Thank you.
And remember, you can read more about the G8 meeting and find all the latest currency numbers on our website. Check it out, Bloomberg.com.